Hey guys, hope you are all having a great morning today. I got some morning videos for you guys this week. We are going to be diving deep into macroeconomics and theoretical economics this week, and what better place to start than in modern monetary theory, or MMT. MMT described currency as a public monopoly and unemployment as evidence that a currency monopolist is overly restricting the supply of the financial assets needed to pay taxes and satisfy desires. MMT is very controversial, because it mostly swims against the current. It opposes basic and fundamental macroeconomic theory, and is often criticized by mainstream economics. Our current government, and the way the Fed operates, relies heavily on modern monetary theory, and it is precisely because of this that we are moving backwards economically. Take a pick in any room at any place, Republic or liberal, rural or urban, boomer bingo room or millennial group therapy. Chances are most people will tell you that it is very apparent that the current state of our economy, the general sentiment, is very grim, and something feels very off. The outlook is grim as well, and though not every will be able to pin the reason to something, you will still get the idea that most people know something is very wrong in the country. I made a video a while back, I believed it was titled, What Happened in 1971. Sadly, it was a morning video and did not garner a lot of views, but I believe it to be by far the most important video I have ever produced on this channel. In it, I talked about a policy change back in 1971 that changed the trajectory of the world. Much of the changes that were brought are related in one way or another to modern monetary theory. In this video, I will attempt to ingrain in you a basic understanding of what MMT is, and what does it have to do with our current fight against inflation. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Modern monetary policy is an economic theory that suggests the government could simply create more money without consequence as it's the issuer of the currency. The main thinking is that government deficits and national debt don't matter as much as we think we do. Instead of relying on tax revenue or borrowing in order to support government spending, according to MMT, the government can simply create more money instead. This is something that Wall Street bets and some folk in the meme stock community often joke about. If you have been in one of these communities for a while, you must have seen some memes of Jerome Powell printing money as a way to solve every problem. This is a big departure from how economists think government spending should be. The idea of the modern monetary policy is that since a sovereign entity can borrow in its own currency, it can simply elect to print more money when it needs to pay off its debt. In essence, countries like the US or Canada or the UK are not limited by their tax revenues when it comes to government spending, and can instead run a budget deficit. This is due to the fact that MMT allows these countries to have a monopoly on the supply of money. Nixon was the one who began this, as so cleverly explained in that, What Happened in 1971 video I had made. The US dollar was on the gold standard and had a fixed number of dollars in circulation based on the amount of gold we had in vaults. Now, we just print endlessly as we need. The main concerns about the modern monetary theory are that it will theoretically work until it doesn't. Economists argue that implementation of this theory is just setting up a countdown for disaster, for you cannot sustain an economy long-term with an economic system where value for currency is just randomly made up and changed so quickly upon need. Main criticisms for this are increased inflation and more deficits for the most part, but most skeptics were often shushed away, with proponents of MMT citing the stock market and supposed strong economy that bounces back strong after every single market pullback. Well, modern monetary policy had its first ever real tryout with the pandemic, as it was the first thing to test its real limits, and it's not looking good for proponents of this policy. The main problem with the people that decided to introduce this idea is that it was brought about during a low inflation era. Inflation has been weak for decades, and had dropped below 1%. It even caused the government to begin spending rapidly to try to prop up flailing households. But then things change. Like I said, MMT works until it doesn't. In January of 2020, the world truly met and faced the onset of a pandemic unlike any other we have faced for generations. Skipping time all the way to now, we are sitting with inflation up to 7.5%, the government's debt piling up to $30 trillion, up from $10 trillion at the start of 2008 and $5 trillion in the mid-1990s. The good news, the only good news that the Fed has to boast about really, is that the government will not have too much trouble selling bonds to fund its spending. The bad news is that, looking at MMT as a whole, as a principal blueprint of economic policy, current pandemic spending wasn't and isn't being carefully assessed for its inflationary effects because it is a crisis policy. Politicians, mostly backed by big Wall Street money, justify increasingly exorbitant spending proposals without plans to pay for them. Now as we stand, roughly $6 trillion in deficit-financed stimulus approved by Congress that did nothing to improve the lives of the middle and poor class, but only enrich the already rich. MMT is standing and looking like a big fat joke. Dr. Eric Leeper's Progressive Policy Institute deconstructs the theory best. He writes that government spending is financed by either collecting taxes or debt that will be repaid with revenue from future tax collections, and that the Fed will operate independently to fulfill a dual mandate of full employment and price stability. Adherence to these norms is what has allowed the United States to enjoy low borrowing costs, allowed its currency to become and remain dominant, and paved the road for economic growth for decades. The main issues with MMT when it comes to inflation is that it offers no real comprehensive theory to determine what inflation rate should be when the economy operates below its resource limit, nor does it produce any proposals for managing inflation that has already materialized. It becomes even more clear when modern monetary policy proponents have become incredibly quiet these days. The only major proponents, Stephanie Kelton, decided to recently compare tax increases to a helmet, a proactive tool that would prevent inflation from growing. She called for the Congressional Budget Office to analyze possible inflation ahead of time and for lawmakers to offset the impact of such findings with tax increases. I ask you smooth-brained folk, how good can an economic theory be when it tells us to avoid inflation but doesn't offer recommendations for reducing inflation once it is higher than desired? It's like hiring an attorney to represent you, but he will always quit once a judge determines a case needs to go to trial. That lawyer would such, and you would never want him because he will quit on you every single time things got serious, when things didn't go the way they wanted. The past 2 years have shown and proven beyond reasonable doubt that policymakers looking to try to solve current economic problems by using modern monetary policy are misguided in their attempt and will only bring economic misery to all of us. We are having scenarios where Congress approves enormous amounts of new spending not backed by tax revenues, with everyone, especially the Fed, supporting them. Inflation was greatly impacted by these actions, and although most of the spending enabled us to experience a robust recovery from that early 2020 market fall, the excess came at the cost of us not being able to appropriately afford the costs associated with it. I sound like a broken record, but I cannot stress enough how bad Jerome Powell screwed the entire global economy with his unlimited spending. It was during this pandemic that he made changes directed to bring a glorious rally to the stock market, and Wall Street became isolated from the rest of the world. While you and me were budgeting groceries and scalping for toilet paper, Wall Street was drowning in dollars, which they quickly used to buy back their stock and pump them to the moon. Instead of acknowledging the trade-offs that came as a consequence for these actions, these modern monetary policy proponents now stand silent, and when they do speak, it is often lies that are easily verifiable. Modern monetary policy advocates have not yet had enough, however. They are now proposing to control prices through central planning, which was an approach that has already been tried and just cannot work today. They are picking straws to formulate whatever they can conjure to propose because they know that modern monetary policy had its big moment during this pandemic and it ultimately failed. Inflation is out of control and the government nor the Fed know or feel confident about their own capability to control it. And that is all I have for you today. I know this video was a bit more complex than usual, but I wanted to touch a little bit of economic theory with you guys today. I hope to have inspired a couple of wrinkles this morning, and I really hope you take a moment to let me know in the comments if you enjoyed the video and what your thoughts are. Don't just click off. Do leave me a comment with your opinions as to the matter or as to whether you liked this type of video or not. It's been a full week since I made morning videos, but I do have some stuff to talk about this week, so people who enjoy these little brief morning videos will have their fill. Many were asking for macroeconomic videos, and that is what I will be focusing for the most part. I do have some stuff on housing, which is by far the most popular morning video topic, but the bulk of what I have are just macroeconomics. Let me know in the comments if you want me to look something up in particular. If I find it important, I will make a video about. For the love of tendies, join my Discord already, I promise you a good time in it. This week could have a lot of things await for us, so if you feel alone and want to be part of a group that is constantly talking about everything happening at the moment, my Discord will remain open and available for everyone looking for a safe haven. I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day, and I hope to see you later today on the recap video. Until then, keep on buying the dip and to the moon.